Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Thursday, the 24th of August. All right, now, exactly as I was talking about yesterday, these second and third tier numbers can add up and give us the overall answer as to what's going on in the underbelly of the US numbers, right? So just looking at the sort of general key theme here, dollar retreats as data shows US economy near stalling point. Now, don't forget, we're a bit starved of oxygen as far as really tangible news stuff. They've been focusing on the Jackson Hole Symposium, which may or may not be a major event. But when it comes to the numbers, as I was saying this week, even though the numbers don't appear to be that important, they are building blocks. Now, what they're looking at is the S&P Global Manufacturing and Services data. Okay, really weak numbers here, right? So, and then you got also really weak Euro consumer confidence. Okay, consumer confidence numbers there too. So a bit of a tricky one for the euro at that point. The one thing I was a bit surprised about was the lack of movement in CAD, right? CAD rallied, okay, and that was more to do with the risk-on profile with the equity markets rallying on the back of the weakness in these numbers, right? So so as we cruise towards this Jackson Hole Symposium and what we get out of that, you're just going to like piece it together. And the moves can come from not necessarily the CPI numbers, but as I said, the building blocks in a week like this. So that's the key theme here. And that's sort of retraced some of the earlier moves, up moves in the US dollar, right? If I just give you a look at the charts, global markets, okay, well, the dollar index, yeah, it's still going up, but we have got a decent correction here. And that correction was felt across the board. Equities rallied. You can see here very nicely that trendline break of the S&P mini there, and NASDAQ loved the news, really jumping up, well, not super aggressively, but a decent move, a bit of a risk-off play, you know, with risk on. That the gold, Bitcoin safe haven situation, well, it sort of dived a bit. And you've got oil also sort of cruising downside, gold up, okay? So the connection between gold and the cryptos there a little bit disfigured. And euro, well, is heading lower, but we have got a decent bounce here. Now, this is going to be sort of ongoing as we head towards the end of the week, right? Now, if I come back here, just give you a look at the data, what we're looking at today. Now, once again, there's not a huge amount of data coming out. If anything, it's US based, right? Which is good, right? Durable goods, a very strong historical number, right? So this number's been around forever. It does have an overall major impact. Now, alongside that, we've got something that's relatively new over the last 3 or 4 years that has been impacting, which was never impacting, the initial jobless claims. Now, the market, as I said, has been starved of momentum driving economic numbers. It gives us a chance here to dig in here. Now, if you're looking for a good trading opportunity, connect the dots, right? Yesterday's data, weaker. So if we get weaker numbers here on the durable goods and or the initial jobless claims, right, you're going to see a further dive in the US dollar. So all you need to do is come back to your instruments, right? And I get this a lot. Which ones should I be trading? Well, the ones with the best technical setup, right? Even just looking at the global markets, like yeah. So the dollar's coming off. We've got a risk on profile. Equities are rallying. Which one of these would I trade? The one with the best technical setup, right? It's pretty simple. Now, whether it's the NASDAQ or the S&P, whatever it might be, would I have traded gold? Probably not. But the answers are there. Now, if I make it even a little bit clearer, you come over here to the charts, right? And we have got some of these instruments that are under pressure still, even though with this slight, you know, retracement in the US dollar. So euro, well, still up to 109.50 is the level to be sort of going long, really. In actual fact, if I just get my chart off there, my pen, sorry. You can actually draw a new sort of shorter term trend line in here, resistance trend line, see if it comes into play, because that could be the first initial sort of breaking point here around 109, the figure. I like it on big numbers. And then you got a secondary resistance line here, right? I know it's a little bit overdone at the moment, but if we get weak US numbers again, I'd say we're going to be back up towards 110 before that Jackson Hole Symposium, right? So that's how you can piece together your technical analysis. Now, sterling, Well, and once again, find the best instrument to trade. This is a bit of a dog's breakfast, okay? And that's what you usually get in the lead up to like a weekend sort of geopolitical event, which is what that Jackson Hole Symposium is. The Aussie, though, these things have been under the pump, Aussie and Kiwi, right? You can see the Kiwi's just getting there. Well, the Aussie had a bit of a breaking point. And once again, where would you get in? Well, if you see the risk on profile in play, you don't have to be like overthink it. We've got a trend line here with 1, 2, 3, at least 3 touches. You'd almost count that as another. And as it breaks through, it takes off. That's the entry point, right? It's, as I say, it's not hard. It's a matter of probably not trying to spread your interest across all the instruments, trying to catch every move. Just catch the ones that count. Now, I've been mentioning this through the week, in particular earlier. Dollar yen up around 146. It's going to create some interest, right? I still think there might be some sort of joint sort of collaboration between the central banks, communique, as they call it, and say, you know what, the yen is too overvalued, should be lower, right? And that's where you get the big move down. But the market looks like they're already sort of predicting it. But those weaker US numbers were the catalyst for a bit of a clean out here on dollar yen, right? So just keep it real. And actually, just going on that, I just set up a risk on, risk off sort of hourly chart perspective. So you can sort of see the how it connects. It really comes from the equity markets, right? So you get equity markets, okay, going up, okay, and in particular the NASDAQ. Now that should drive the risk on pairs, right? Equities go up, it's a risk on appetite. Aussie going up, Kiwi going up, stalling at the resistance line. And I've inverted dollar CAD. So it's so you get the CAD quoted the same way as the Aussie and Kiwi against the dollar. And you can see it clearly going up as well. All right. So that makes a lot of sense when you invert dollar CAD. So instead of dollar CAD, it becomes CAD US, right? And you can see very clearly if the risk on or risk off profile, in this case, a risk on profile is actively in the markets, because you can see it very clearly visually on your charts. Now, if you can't see that, well, that's why I actually have like my sort of major sort of screener page here, so I can see exactly what's going on. And in actual fact, if I go to my follow the trail page, okay, equity indices up, you should either see very clearly the dollar pairs going down, which they are, but we are seeing a bit of disparity here amongst the Euro, Sterling, Aussie, Kiwi. They're not all going up. So, okay, a little bit confusing. I'd be focusing on the pairs that are, because that works with a risk on profile. Commodities, a little bit mixed. And the safe havens, well, some of those are sort of coming back into play. You probably expect that to happen as we edge closer towards the weekend's numbers, right? So just coming back, just to give you the heads up on the durable goods numbers, okay, using News Squawk here. Okay, you've got the range. Keep an eye, very close eye on the range. Expected, obviously, very important. But outside that range, things can get a little bit loose, right? So, and the jobless claims numbers. Now, a couple of weeks ago, this is a weekly number, a $10,000 number difference on the claim actually had an impact. Once again, it was a situation where the market was a little bit deprived of momentum driving data, so they jump onto anything. We've already got weaker US numbers in the market from today or yesterday's trading. We want these to match up, and that gives us the move, the bigger move, easier move to the downside for the US dollar. If these numbers all come in strong, which I can't imagine they will, well, then you just get a reversal of yesterday's move, right? So you know what's going to happen. You just need to keep an eye on the numbers, and that's how it works. So easy to say for the European and North American traders, because that's your trade day. Asian traders, well, you're going to have to be up pretty late to sort of catch these numbers, but that's the setting, right? You don't need to go looking for trouble. You know what impact it is, right? So strong numbers here. Okay, I'll put a plus. Equities go down, equity indices go down, the dollar goes up, okay? And vice versa for weak numbers. So weak numbers, equities will rally further, and the US dollar will continue to fall. That's easy, right? All you need to do is come back to your charts, right, and piece together where is the best either currency to trade with a weak dollar or a strong dollar, right? Or if you come back to the global markets and you're trading equity indices, for example, look for the one that hasn't broken yet, which is clearly the Dow Jones, and you might get lucky on that as well. And that's it. There's nothing more to do. You don't have to overcomplicate things. You do not have to sit in front of your screens and stare at numbers like this, right? This is a great way to sort of connect various aspects of the market, focus on the instruments that are strong or weak. Like the moment, the Kiwi is getting drilled across the board, as is sterling. And you can sort of go and sort of dive deeper into that once you can see what is going on. All right. Okay, guys. So that's pretty much it from me for today. So don't overcomplicate things. Check out your calendar, like coming into Friday as well. This is where it gets a little bit interesting because we start to get the two biggest central bank heads talking. We got the IFO business numbers leading into that Jackson Hole symposium, which is on the weekend. And we should get something out come the Monday. They used to wait for the Monday open to release the communique from the central banks. And it was always a massive problem, right? Because everything would go up or down 200 points almost at once. Basically untradeable. But what we're looking for is the Fed to be maintain their hawkish stance, their fight against inflation, a big signal around China and the potential problems there. And to me, the outsider one is Japan, right? So that's where we can see. But right now, just focus on what's in front of you. If you don't have a good trading opportunity, right, a good technical setup, well, then maybe there's no trade for you, right? As it is, we've got a downward bias on the dollar, and that's something you can use. All right, guys, do simple better. Good luck. All the best. Cheerio.